In the heart of the UAE, where business thrives, lies the essence of accounting. Welcome to Chapter 1 of Fundamentals of Financial Accounting. Importance of accounting. Accounting is the language of business. Accounting is the process that allows companies, big and small, to track their financial activities. Think of it as the heartbeat of the business world, ensuring everything runs smoothly. When Dubai hosted Expo 2020, meticulous accounting was crucial to manage the billions of dirhams in budget and provide the event's success. Users of financial information. Internal users are individuals or groups within an organization who use financial information for decision-making purposes. Examples include management. They use financial data to analyze the company's performance and make strategic decisions. Employees who might use financial information to negotiate salaries or understand the company's financial health. In the context of the UAE economy, a company like Emirates Airlines would have internal users like its board of directors and management team who would rely on financial data to make decisions about routes, pricing, or fleet expansion. External users are individuals or entities outside the organization who use the financial information. Examples include investors. They analyze financial statements to decide whether to buy, hold, or sell shares. Creditors. They want to ensure the company is financially sound and can repay its debts. And government agencies. The Federal Tax Authority might analyze a company's financial statements in the UAE to ensure tax compliance. For instance, in the UAE, external users might include investors in the Dubai financial market or creditors of significant banks like Emirates NBD. Opportunities in accounting. The UAE's dynamic economy offers a plethora of options for budding accountants. With sectors ranging from oil and tourism to real estate and technology, the demand for accounting expertise is ever present. As a global business hub, the UAE offers numerous opportunities in the accounting sector. Some of the high-demand accounting jobs in the UAE include financial analyst, which analyzes financial data and trends to advise businesses on their financial decisions. Internal auditor, who ensures compliance with internal procedures and regulations. Tax consultant. With the introduction of value-added tax in the UAE, there is a growing demand for tax consultants. Ethics in accounting, a key concept. In the world of numbers, ethics stands tall. The moral compass guides accountants, ensuring transparency, honesty, and integrity. A famous business scandal highlighting the lack of business ethics is the Enron scandal. Enron, once a well-respected energy company, was found to have used accounting loopholes to hide debt and inflate profits. The scandal led to the bankruptcy of Enron and the dissolution of Arthur Andersen, one of the world's 5 largest audit and accountancy partnerships. Fraud triangle. Where there is money, there is temptation. The fraud triangle highlights the 3 main factors that can lead individuals to deceit and fraud. By understanding these, businesses can safeguard themselves. The fraud triangle consists of 3 elements typically present when fraud occurs. Opportunity. This refers to the situation that allows fraud to occur. For instance, weak internal controls can provide employees with the chance to commit fraud. Financial pressure. This is the motivation or reason behind committing fraud. An example could be an employee facing financial difficulties, leading them to embezzle funds. Rationalization. This is an individual's justification to defend their fraudulent actions. An employee might think, "I'm underpaid, so I deserve this." Generally accepted accounting principles and international financial reporting standards. In the realm of accounting, standards are crucial. While the USA predominantly uses generally accepted accounting principles, the UAE adopts international financial reporting standards, aligning with global practices. Their main differences include presentation. IFRS does not mandate a specific order or classification of financial statements, while GAAP does. Inventory costs. IFRS uses the first in first out method, while GAAP allows both first in first out and last in first out. Intangible assets. IFRS requires an asset to have a separately identifiable value, while GAAP does not. In the UAE, companies are moving towards adopting IFRS. The global trend is leaning towards achieving universal accounting principles, simplifying global business operations, and making it easier for investors to understand financial statements. Principles and assumptions of accounting. Accounting is not just about numbers. It is built on foundational principles and assumptions. These ensure that financial reporting is consistent, reliable, and meaningful. Emaar Properties, one of the UAE's real estate giants, reported revenues using the revenue recognition principle. This principle ensures that revenue is recorded when earned, not when cash is received. Proprietorship, partnership, and corporation. Businesses come in various shapes and sizes. Each has unique accounting nuances, from the sole proprietorship of a local shop in the souk to the vast corporations that shape the skyline. A proprietorship is owned by one person. It is not a separate legal entity, has unlimited liability, and raising capital can be challenging. A partnership is owned by two or more people. It is not a separate legal entity, has unlimited liability, and raising money is more accessible than a proprietorship but more challenging than a corporation. A corporation is a separate legal entity owned by shareholders. It has limited liability, faces double taxation, corporate and then dividends, has an unlimited life, and is the easiest to raise capital. Transaction analysis and the accounting equation. At the heart of accounting lies the accounting equation. Every dirham spent or earned, every asset acquired, and every liability incurred plays a role in this fundamental equation. Financial statements. The culmination of all accounting activities is the financial statements. These documents are like a report card, highlighting a company's financial health and performance. Income statement. A company's revenues and expenses over time, resulting in net income or loss. The balance sheet is a snapshot of a company's assets, liabilities, and equity at a specific time. The cash flow statement shows the inflows and outflows of cash from operating, investing, and financing activities. The statement of equity shows changes in owner's equity over a period. Each of these statements provides valuable insights for decision-making, such as assessing a company's profitability, liquidity, and financial health. As we conclude Chapter 1, remember that accounting is more than just crunching numbers. It is the story of business, told through the lens of financial transactions. In the UAE, where business thrives, accounting is the unsung hero, ensuring transparency, growth, and success.